Welcome to Key Points for April. This month, why we've increased our global growth forecasts, our take on the race between mass vaccinations and a further pickup in COVID infections, and why we still believe there's upside potential for equity markets. Now, to that first point, we've quite appreciably raised our global growth forecast for both this year and next year. This has been a function of additional stimulus measures that are coming through, particularly in the United States, where President Biden managed to get his $1.9 trillion package approved by the Senate, but also additional measures coming through elsewhere in the world. But we've also had a particularly robust first quarter of the year. Certainly in Europe, GDP is likely to be disappointing as we had expected. But when we look at the United States, China in particular, but also other Asian economies, the growth dynamic has been very robust actually in that first quarter. Global trade has shown very good numbers being posted on a month-by-month basis. And as we move into the second quarter, we believe that dynamic will continue and in fact accelerate, given additional opening up of economies. When we think about households having very high savings rates, companies have got a lot of cash in their balance sheets. As we mentioned before, we think that will get deployed quite significantly over the remainder of this year and of course into next year. Now, a potential obstacle, of course, in that outlook is our second point, which is this race between mass vaccination and a further pickup in terms of infection rates of COVID-19. Now, we always believed that we were in the middle of the year before we really saw economies be opening up as mass vaccinations became more widespread. Right now, we're a little concerned because we've seen additional lockdowns having to come through in places like Europe and even in Chile, where the vaccination program has been very good indeed. And that, of course, is a little bit disconcerting. We're coming up to the holiday period. We've got the Easter season, which looks like being disrupted significantly for the second year running. And of course, the hope is that the service sectors manage to open up for the summer season in the Northern Hemisphere. This is really going to be critical and something that we have to watch in the weeks and the months ahead. We still believe this is going to be likely, but of course, this is still the very big uncertainty that's out there and of course will impact that growth dynamic going forward. Now, turning to our third point, equity markets, we believe, still have further upside potential. We had mentioned last month that the move up in bond yields was a bit disconcerting and felt had gone a little bit too far too fast. These have kind of held in at this level, not really appreciating too much higher. And as a result of that, we do believe that the equity markets can again continue on this up track. We wouldn't be surprised, of course, if there's more volatility. There's still a lot of uncertainty out there, particularly around, as I mentioned, these vaccinations. But broadly speaking, the liquidity element, higher growth expectations for earnings coming through, we think are likely to support the asset class in the months ahead. Remember, this full report, along with all our other documents, can be read, as always, on zurich.com/MSME.